All right, everybody. Thanks for watching after hours here. We're gonna get it rolling on this webinar. It's 5:27, and we're on top watch. I don't know. I don't have anything else funny to say. All right, we're just gonna dive right in here and just get rolling on some indexes. All right, so we're gonna keep this brief with the indexes because I feel like they've been beaten to death here over the last couple of weeks, really. Just, I mean, nothing but grinding up here. But kind of what I'm thinking here, I guess the Nasdaq's probably the best, like the best, I guess I don't know what the word is, um, proxy for everything else. Okay, so right now, I think kind of what we're looking at here, I'll give you guys both bullish and bearish scenarios. We'll do bullish first. I think I don't really know if this count is correct here. I think it's probably more something like this, where we saw a wave 4 here with the higher volume um, a, just a bit ago. So I think it's certainly possible you could see something like this, where you just see like a continuation. But I don't really know if that's going to be correct here. I think I'd say this is probably the most uber bull scenario, where you get this wave 5 that just goes straight up into space. We're not really seeing a lot of enthusiasm. In fact, we're actually seeing a little bit more volume stepping in here. So if we look at something like Nasdaq futures, you see you got a ton more volume here from some of the selling. So this to me kind of signals that there's like a stoppage almost of or like I wouldn't say like a first leg down quite yet, because it might be, like I said, like a wave 4 kind of thing. But oops. But overall, oh man, I'm losing my spot already. Crap. Okay, here we go. But anyways, this I think is probably the more aggressive bullish scenario. I think probably what we could see in addition to this would be probably like a smaller sort of ABC down here, where you get just a little bit lower. Nothing, anything crazy. You're probably it's about the last. It's kind of like a retest of the last high here. You'll see like if you just draw it, like 29,700, I think is probably a good like resting point for it. At least that's where the first line of the sand is for support. Let me zoom in here. It's probably a bit hard to see. So that's I would say probably the more I guess you could say probably more realistic scenario. There has been some decent selling, so I wonder, especially at these levels, I'm kind of wondering if we're going to see like a kind of like a wave 4 kind of bound box here, and then ultimately it depends on how fast it is. Like typically the law of alternation here means that you get like a kind of a lazy wave 2 or wave 4, or like a sharp wave 2 or wave 4. You don't really get like a sharp wave 2 and wave 4. So anyways, I guess the long story short of it is, any bullish scenario really, I would say the bifurcation for Nasdaq is probably around this 29,700. For the S&P is a little bit different. I'm thinking that we might see a little bit more skirt around up here. We had a pretty decent rejection at this 75.50 level. Whether it's fixed or not is another story. But this 3.618 extension level, that is measured all the way back down from this rally here, all the way from the bottom, back at the end of March, or started at the end of March. So I think we are in this, like, just not quite top yet, but getting really close. We're starting to see a little bit more volume here. You can kind of see here, and we're starting to see some sellers testing buy support. Really like to call it market research, because the sellers are testing their opposition. It's a lot easier to sell a market down in after hours of futures, because there's just not enough, or there's not as much liquidity. There's not as much shares being traded, where it's easier to juice the market up, or at least like do support, because it's expensive. So or at least to do it during normal cash session. So I think this is probably your more realistic bull scenario, especially if you're going to find some sort of support. And I'm sorry, I didn't mention level 7,500 would be the S&P level for support. And if it breaks, then we did get a lower low, but it's still kind of contained here. So I think that this kind of follows all the rules of this sort of wave 4 sort of dynamic here. However, we did sink below the last high, but that doesn't really matter too much. I think it's more about it's really more about like momentum and stuff at this point. But anyways, starting to see some volume, and that's what's getting a lot of airtime here. So I would say it's another possibility here is that we have a very, very short sort of short week. Could have a short wave, and you could see just another slight higher high, potentially after we see, let's say we see a little bit of a low, then we get another slight higher. This would make a lot of sense, at least for like an extension level for this last peak to trough here. Now I would say it's not 100% reliable, but it's certainly since everything really has been bullish, it's certainly one of those things where I think now we're just going to wait and see if we get some good support, and then you can buy in for a scalper. But this looks like a pretty easy ABC. I still probably wouldn't short it, but it still looks like a pretty good signal that we're at least seeing some sort of topping behavior. Anytime you see something like this, especially when you're looking at like the day, you get one of these like spinning top kind of things, dojis, not really doji, but if you get one of these spinning tops, that typically means that there's just indecision, and a lot of buyers and stuff are kind of at equilibrium with the sellers, and as they should be. This has gone on long enough. There's only so many quote unquote historic rallies you can go through here before it becomes just asinine. All right, so I'd say that's your bullish scenario here. We'll do bearish really quick. I know, don't laugh at me. I'd say this is probably the bearish scenario that so like if we do see some sort of let's say we do see like a pretty decent size like ABC. I mean, it's possible. I mean, it's only like a couple percent, so it's nothing crazy. You could see something like this, but I still don't think you'll see a ABC to end this range here. It's possible you could see like a ending diagonal or some. I know I got a lot of lines on here. I'm sorry, but it's possible you could see like an ending pattern. But this is a longer term trend line on a logarithmic scale. So what that means is, over time here, they just kind of blasted through this resistance, and then it was tested once, and then really wasn't defended that well, at least in my opinion. But this is one of those things where you could see like a false breakout, where, well, I mean, that is kind of what I think it is right now. It's kind of a false breakout where it's kind of losing steam here. Something's wrong with the volume after this ticker changed, but I guess it's probably easier to see it with the Nasdaq chart for futures. You can see that there's a lot higher volume here. So to me, that kind of seems like there's at least somebody saying that's enough. But I do expect there to be some sort of like test of this trend line again. I think this kind of looks like a 0.768, pretty close. So from a timing perspective, that aligns to next week, early next week. So we could end up seeing some selling tomorrow, maybe Friday. Not quite sure yet, but this at least is a short-term bearish scenario. Now, I'd say probably the best case like bull scenario is if you get a bounce there on some really high volume. Then you kind of know that the sell-off's been canceled. But one of the things that I typically look for is to see a lot of like ABC patterns, especially if we get close to like just topping in general. Like you can kind of make out some ABCs, but I don't really know if this is 100% accurate. It actually kind of fits the profile of like a wave 4, a very, very short one, and then this next this last little kind of like wave 5. So with all that jargon and stuff kind of out of the way, I guess my gut feeling here is we'll probably get some sort of like little pullback, and if the bears don't step on the gas, there's no hope for any sort of selling whatsoever. But if you do see some higher volume like you saw today, then I think you'll get some sort of, you could get some sort of rush at the exits. Now, one thing I did want to show here, oh yeah, a little pencil drawing here from 2 weeks ago ended up being pretty. Hold on, oops. Anyways, ended up being pretty correct with the crayon. So maybe I'm doing it all wrong, guys. All right, let's look at stocks here. So with stocks, it did have a decent recovery, but you can still see here that it's got a lot of volume, or like a lot of sell volume here. And with the morning post, I try to indicate here that there's lots of conversation going around now about these guys like the not just like chip stocks, but like AI stocks in general, kind of getting a little ahead of their skis. Well, yeah, clearly, but not just getting ahead of their skis, but like eventually you're going to have to pay for some of this stuff. And like if you're going to increase costs on end users, it's not going to be this transformative technology like everybody thinks. It's going to be just another expense that people can't afford right now. So as long as gas prices stay high and interest rates stay high, all that kind of stuff, and then these AI companies start charging for better access and stuff like that, and more compute tokens or whatever the hell they want to call it these days. I think that's a mistake. Well, not if you're running a company. Sure, you want to make money and increase shareholder value, but I think that's a general industry mistake. If you want this technology to truly transform everything, you're really going to have to make it cheaper for all, or else it's just not gonna take hold here, especially if you're limiting access to higher caliber models. Okay, so with that being said, I think I don't really want to. I don't think it's the right time to do like a uber bearish scenario. I think we pretty much covered it. It's just that this is probably the best, say probably the most likely case here. Maybe a drop here to test the 21-day moving average, and then any resumption of this, you could see like a different pattern take place, kind of like a megaphone pattern. But another thing you could potentially see is more of a truncated version, where we might. Yeah, I doubt it, but you could see like, oh man, we're right at the top. Well, you could see something like this, where where you get a lower low, and this actually completes some sort of like head and shoulders type of pattern. You could even see something like this. It depends, you can't really rely on the news cycle these days for stuff like this. But I kind of get the gut feeling that you might see some sort of like head and shoulders action here. The timing is always suspect, of course, but still, I mean, if the bulls can't maintain momentum, and it seems like they're running out of steam here, at least from this constant up. I think they're kind of running out of buyers. That the FOMO crowd's already bought in, and you're starting to see. Well, not starting. I mean, over the last week, it's been just incredibly bearish on social media sites like X and StockTwits. Just people essentially complaining that. Not complaining, it's the wrong word, more just stating the obvious. Here's a bubble higher than 1999, blah, blah, blah. And then you have the perma-bulls that jump in and say like, no, we're just getting started. Like that is classic bubbles, classic bubble. Eventually, one of the two are going to be right. I mean, I'm not really picking sides right now. All I know is that, yes, I do agree it is overvalued. That doesn't mean it can't go higher. So what I'm trying to do is I'm trying to figure out what are good like entries and exit points for potential, like let's say short scalper trades over the next week or two, or like other types of trades like swing trades. So I guess if you're sitting here kind of wondering like when is it going to end, I still think you got a little bit of time yet, but I would say the big signal to look for to confirm whether it's going to be bull or bear over the next couple of days is going to be if you have a continuation. So something like tomorrow or Friday, let's say you have, let's say you're down 1% for the Nasdaq. And that's not a whole lot, like in the grand scheme of things, but that still tells me that there's a lot more interested sellers than there are buyers at these levels. So I think that a lot of liquidity is getting a little dry up here. So you might see some sort of sector rotation, where I'll cover, metals here in a second. But all I wanted to say really is that, that of the two possible scenarios, I think you'll probably see something more like this, like the S&P, where it just kind of creeps a bit higher, and then you see a little bit more of a rollover. But these big long-term trend lines here, these are likely going to be tested again pretty soon. Sorry, I got to redraw this. It's kind of log scale, but yeah, I guess to summarize everything here, seeing some volume, it's promising for some selling, but I don't think you'll get much teeth unless there's follow through. All right, that's enough of these stupid indexes. Let's talk about other stuff. Let's talk about the yield. Well, who drove this chart? Okay, so the yield itself, yeah, I could see it had a bounce today right on the bear target. It's probably not done yet. I think we'll still get a little bit more of a pullback, maybe to test this 50 daily moving average. This is like the, that's the purple line, sorry. So you might get a little bit more of a dip here, but if we do, I'm going to buy some more TMV. My TMV position's still in the green, but not by much. I still think if we head back down here, it's probably be break even or something like that. But I still think this is just a temporary reprieve. We just kind of, if you look at the daily, we just blasted through this long-term trend line resistance here, and didn't really think much of it. So bond traders are the best in the business. They know what's up. So don't go against the bond market, or well, I should say never bet against the bond market. Equities are always second fiddle to the bond market. So if we do end up seeing lower rates, I do think it's probably more of a fake out. People are probably buying bonds here as a protective measure for like higher indexes. That's also kind of why I think we didn't really see the VIX get higher today. I think probably what we were seeing is more people buying bonds to weather any sort of upcoming temporary storm here, and not really like playing the options game. Typically you can see that with like let's say like bigger pension plans that can't play the options game. It's more about the slow long-term growth here. So typically when they've got in and taken lots of profits, per usual, then they kind of recalibrate and go defensive on some bonds and other sector plays. So anyways, that's kind of what I think is going on here, is that you're going to get a bounce back in yields here. I can't imagine CPI or PPI coming up here is gonna abate anytime soon. I think we're gonna run out of supply soon too, for all that strategic reserve petroleum that's been dumped into the markets. And we'll talk about that here in a second. But all right, so now we got gold. I bought right here for GLDI. It's more of an income play, but this really does look like a gigantic bull flag to me. Even if it does head down a little bit lower, and it probably will. This to me kind of looks like one last little ABC, one last little hurrah. But I probably won't get too low, because we got this 200 daily moving average here in this turquoise line. But if it heads lower than probably 43.50, I'd say it's a different story, because you got a lot of like support here. Back to last peak, back in October 25, you got 43.76, and you got a lot of buying that had happened before then. So that, institutions aren't going to allow break even. It's just not how they work. So anyways, I actually think this is going to be more of a springboard here for another run up here in metals, because what else is there to guard against inflation? Bitcoin is just whatever. Bitcoin isn't really a store of value. I'll probably get tarred and feathered for that, but it's the truth. It's just ones and zeros. You're buying ones and zeros. It's a completely speculative asset. Gold is at least more widely accepted as some sort of replacement currency for anything. If the world is about to explode or whatever. Same thing with silver, but I think at least buying it at this 0.618 level was or this 4,400 level was a good entry here. Now with silver's a little bit different. I think might get a little bit more of a retreat in silver, but it's not really, like, the chart isn't really as obvious as something like gold. So I would say if you're gonna buy in for metals or whatever, gold is probably a better a better, more reliable sort of asset. It's not as price sensitive as something like silver is. It's also a little easier to buy shares in something like gold, like GLD, versus something like SLV. That's really your only, you're really your only like ETF here that you can buy for silver, unless you do futures, and it's a great way to get broke. All right, so let's look at oil here. Oil also looks like another bull flag here. It's not 100% done yet, I don't think. You probably have another visit to maybe like this 85-70 level, and then I would expect to see some sort of buy support, because right now we're just seeing a bunch of selling, but I don't think that that's going to be for long. There'll probably be some sort of saber rattling, or who knows. But anyways, this does look like a pretty decent flag, or B wave kind of thing. So yeah, that's my play is commodities here, because equities are for the birds at these levels, guys. For the birds. Yes, I'm on camera saying it. I really don't care if you guys are buying indexes for long-term holds at or the S&P at 75.50. Then yeah, I got a bridge to sell you. All right, so let's look at natural gas. Natural gas really hasn't really done much lately, except for just kind of creep up. He's got like contract rolls and stuff, and everything that kind of bakes into this, and it's not really the best moving asset right now. Oil's almost in the green here. I'll probably just exit that, because it's just kind of a, I don't know, it's not really playing out. I think oil's probably, or it's a new asset. I think oil's probably the better play. All right, Bitcoin. So Bitcoin's been doing this sort of like accumulation distribution thing. I don't know, it's been kind of weird, but you look at the volume, it's just abysmally low. Can't talk today. These trend lines, they're kind of squishy anyways. I still think this looks like a pretty decent looking flag, like an overlap. But I think, yeah, I got jokes on my charts. But I do think that you will see, or at least like you could see like a combination of like what you call like a series of ABCs. It's called a zigzag, but it kind of looks like this. You might get a little bit more upside here with Bitcoin, but I don't know. I just don't know yet. It's kind of weird, because it's been on the decline for quite some time. But again, if you zoom in here, if it was a strengthening asset, you would have found some good support here, like at the 50. Now that we're almost getting close to this death cross here, where the 20 or the 200, this turquoise line crosses over 50. Sorry, it's the 50 that crosses over. But it doesn't matter. It's still bearish. Okay, so let's look at semiconductors. What a joke this is still. We did have a decent amount of selling today. Yeah, pretty decent. I wonder if it might be like we got something kind of like this before, back here, a little bit more violent selling, but kind of thinking it might have some legs here, especially if you get a retrace back up to like 575 or something like that. You might see another wave down. But yeah, I mean, it's got quite the way to fall here. If like I said, this is a log chart now, so it's got quite the ways to fall. So even if you get like a 20% correction, just takes you to 450, or 23%. That, hold on, there you go. 24% correction gets you to 450, which is still ridiculous. All right, Nvidia. Nvidia, I think, is probably poised for its final run up here. I feel bad for all the people that sold and shorters and stuff like that. They just got steamrolled on Nvidia. I really don't know how any bears are left alive, or their positions are so badly beat up they've just quit. That's what happens at the end of a bubble. But yeah, Nvidia, it's still got some selling here. I think it's just profit taking from earnings, or just a little bit more of a drift down here. But people are probably starting to realize that, yes, revenue is good, but for how long? All right, Tesla. This one is a little weird yet. I don't know if we're going to see something like this, but I do think we're going to see a little bit of resistance here at this 445 mark. I think this is going to be more of like a general stopping point, maybe a pullback here. But if you don't see it above 445, it's bearish. So you could probably take some bear put spreads or something like that. But still, it's just a dangerous market to short in for now. All right, guys. Well, that's it. Yeah. Well, hold on a second. Let's check the quantums. I don't have. No. Oops. I don't have these set up on this view. Okay. Yeah. I guess that's it then. I'll post some more stuff about that in the future. All right, guys. Well, thanks for watching the abbreviated version, and we'll see you tomorrow.